We have Hans Goetti, Chief Investment Officer of Finaport Investment Intelligence. Hans, some are saying this downgrade, not a surprise, but boy, my sentiment is weak. Do you really need another hit?
Well, yes, sentiment is taking another hit, although the downgrade of Italy is not exactly a surprise. There may be more downgrades following in other countries. The problem in the Eurozone is that you have austerity measures which impair economic growth, and of course that will lead to lower tax revenues, and that of course will lead to further downgrades. So it's a vicious circle in a way, and somehow one has to break out of that vicious circle, and at the moment nobody has the recipe.
Yeah, well, it seems that all markets around the world are really hinging on what happens in Europe step by step. We do have this Fed meeting this week, but do you think we could see more downside for markets trading, say, in the next few months up until the end of this year?
Well, our scenario called for a recession in the United States and Europe, and against that backdrop we think that corporate earnings are still too high. The estimates are too high, and we are expecting earnings downgrades. Now, equities of course are very sensitive to earnings downgrades, and we think that the current rally that we're seeing right now is pretty normal within a recessionary bear market. You tend to have a retracement from the initial drop. 50% retracement on the S&P 500 will get us to about 1230 or something, and then the last leg down, and we still think that last leg down is ahead of us.
Wow. Okay. And what about for the Asia Pacific in this part of the region? You know, some are saying, putting a theory out there, that maybe we're a little bit more insulated than the rest of the world. But your thoughts?
Well, Asia is still pretty export dependent. Some countries are more than others, but Asia has the option, at least the bigger economies like China, for instance, to focus more on domestic growth, and that's something that we're looking at that makes us relatively bullish on Asian currencies, because one of the options would be to let currencies go up a little bit against the dollar, because Asian governments and central banks, they know they cannot export their way back to growth because of the deteriorating external environment. So we expect some measures to focus more on domestic growth in countries like China, for instance.
Okay, that's interesting. Do you think Asia might survive if we see, say, a recession in Europe, and some are putting the scenario of maybe a recession in the third and fourth quarters in the U.S. as well?
Well, Asia will obviously be affected, especially those markets which are more cyclical, for instance, like Korea, Taiwan, and so on. Singapore, of course, which is very export dependent. That's a challenge there. But again, Asia has better fundamentals. Asia has a much more solid banking system than the United States and Europe has, and has the potential to grow their domestic economy. So on a relative basis, Asia should do better, but obviously we will not be unaffected by what's happening outside.
Okay, what are you expecting from the Fed this week, Hans?
Well, it looks like it's a replay of what we had in 2008 when QE1 was announced. That was also a meeting that lasted one day longer than the others. The problem this time, of course, you have much more dissent within the Fed. It's not 100% a done deal, but everybody is talking about Operation Twist, that the Fed is buying longer dated bonds. That alone certainly won't do the trick. They will have to come up with some other things. The problem is now that you have a diminishing return on all these QEs. QE1 was relatively effective. QE2 did very little for the real economy. It did something for the stock market. And QE3 might even be less effective. So trying the same thing over and over again will not necessarily lead to better results if it hasn't worked before.
Okay, so Hans, given everything we talked about in this discussion, how are you, I guess, adjusting your portfolio in anticipation?
Well, look, we're living in a world of currency debasement. All these solutions, the quick fixes and everything, requires money printing by central banks, whether it's the Fed or the ECB or whatever. So what you want is to be in a currency that you cannot print. And we have very high exposure to gold. We have some exposure to silver in our portfolios. And in relatively the few safe haven currencies that are left, the Swiss franc is not one of them anymore. It used to be. Sing dollar is one. Maybe the Norwegian kroner is one. But we are running out of safe havens, and on the other hand you have opportunities in equities with high yields, defensive industries, and actually some bonds as well. We think the US Treasury bond, the 10-year bond, has the potential to go down to maybe 1.5%, so you have some upside there as well. So there are opportunities out there, but it's more in the not so risky assets.
Okay, Hans, thanks for joining us this morning. Hans Goetti of Finaport Investment Intelligence, joining us from Singapore.